Good evening. This is Ken at Tortoise Capital with a nightly strategy podcast for June 22nd, 2022. I'll take a quick look at the market health check. Yesterday's upward range expanded a little bit today, but we ended up just about closing where we closed yesterday for a fractional loss. We're still down 22%. The daily range increased slightly, and we finished right in the middle of it, so this was a nondescript day. L10 has reversed. We've crossed the baby dragon. We're at the edge of the dragon. The upward momentum short term is still up. Get the PSAR at the Bollinger Band mean. We have the dragon to get through. So this was a sideways day completely, which favors a return to the short side because you wanted to see this upward momentum continue another day. It did not. It went pure sideways, so that's a one strike against it, so we're going to be very cautious. We're going to be short for sure if it gets below 370. Still in the winter, in spite of the fact that we've got the first, the cross of the baby dragon in. Sector performance. The S&P was down a fraction, 0.08. The Russell, the Dow, and emerging markets were all worse, especially emerging markets, minus 1.7. The Qs were slightly better, but down 0.15. Treasuries had a strong day at 2.75. Just take a quick look at the sectors that underperformed. Discretionary, finance, tech, Brazil, commercial real estate, clean energy, Mexico, agriculture, lumber, materials, lithium, blended commodities down 1.7, blockchain and wheat and precious 2.3, the VIX off 2.69, which is actually an upside potential, and then a block here of Bitcoin, oil, energy, global future, finance, Ethereum, and crypto infrastructure, all between 3.7 and 4.7. Painful. Oil exploration, blended commodity or blended large caps in the crypto 5.5. Coinbase and Devon Energy really getting smashed today, -9 and -5. Cliff, U.S. Steel, and Alcoa, all the metals continuing to be weak. Rivian off, Robinhood, Tesla, Microsoft, and Apple could not follow through today. To the upside, there's the S&P. Marijuana and FANGs slightly below sea level there. The break point to actual making gains, the Aussie dollar was about flat. There's staples, but real estate, ARC Innovation, S&P Bio, and then ARC Genomics up. Really not much to choose from, and it was only index strength, really, that kept all of this from dragging it down further. This is not a healthy sign. So yesterday was kind of a muted recovery based on broad S&P index buying, and today just reinforced that with less index buying and very little pulling it north. So this is not a promising sign, so be ready for a sharp move to the downside. We'll take a quick look at the reports now. I've reconfigured the index pages so you can see the components. In the blue are the primary pages for establishing the specific trading plan for tomorrow. And in the white are supporting details for the professional. Mostly featuring the formalizing the ad of the sniper method, setups, and stats. Might as well hit the sniper trade of the day here with Tesla, the most important stock in the world. There's the start of the day. Here's our standard risk box of $7. There's the 1/2 risk box. We get the PSAR break, standard risk box up. Buy it, it rolls over, scratch it. Rebuy it on the breakout. There's your standard risk. It rolls over. Micro gain, and when it breaks out to a new intraday high, buy it. Standard risk box. Cash it. It holds here, which is important. You have this support level, that support level, this support level, that support level. All of that is pointing up. The PSAR has been strong the whole way. So you get this re-entry at the new high of the day, and then this works. Great big 1-bar gain, so you want to be locked in at half. Rolls over 1-2 exit. That gets paid. You get the owl entry and the supported fall crossing to the downside. 1, when that shelf breaks, 2 position short. 1, 2, 3 selling or covering inside the dragon. Try the SSC, quick fail. Try the Kata 2, quick fail, and that's enough. So we got paid pretty nicely on this one, and especially on that one, and that covers the scratches and micro losses. Sniper trade of the day, Tesla. Still bearish normal. Long-term suffering. Short-term, this is decaying. Risk off. Risk Z is pointing the way to the downside. There's your metals and industrials and the energy sector. Healthcare, Merck, United Health, Johnson & Johnson. Just a ton of auto framers. Many to choose from. You get 15DD in Home Depot at 5-1. This is looking like a value play. That's especially looking like a tactical trade to me. Looking for more out of United Health and that whole healthcare sector. That's really starting to look pretty strong. The ETFs also, tons of auto framers, not surprising at this rollover point. Metals and mining and oil exploration going through an uncharacteristically painful segment here. Finally, some strength in the treasuries. There may be a short-term trade there as well. Defensive play in real estate, 3-1. Godzilla in the sniper. Dow. Home Depot. Target, Intel. Lots to choose from. Walmart. Bed Bath. Simon Property Group. Disney. Lots of goodies to choose from here. We've added the daily range stat update and the R10 intraday standard. Still got all the Bitcoins, but Simon Property Group and U.S. Steel especially interesting. There's your horrible price location, but a quiet, stealthy move in U.S. Steel. So I'm very interested in that one. Doesn't have much intraday risk to contend with either. Really liking that one. No popcorns, only a couple fence sitters to hit. The most quiet ones ranging from, minus one, I'm sorry, minus 1.9, all the way down, and then the most volatile. So we're sorting these by Z5. This is from the S&P 500. So there's some hunting and fishing that you can do inside for your preferred targets in there. You've seen the stats already. Dominating in the winter. These are the sniper stats. On our tactical symbol set. So you need trade locations. You need the short-term volatilities. You need the range stat for the intraday daily move, the maximum reasonable move. And then 1/10 of that gives us the R10 intraday manageable risk box. So plenty to fish for. And this is sorted by most volatile on the 5-day all the way down. So XOP looks very interesting to me. There's it's in the middle of its weekly, but the 30-day and the 10-day are just getting murdered, and it's extremely volatile on the 5-day, but the 1-day has slowed, that volatility has compressed. So that's going to be something that is sold sharply, finished in a doji, and maybe ready for a breakout or a breakdown for further on about 80 cents intraday risk. The energy sector being well represented here with exploration, Devon, XLE, oil, blended commodities, plenty to choose from in there. In the energy sector, that is really in play. Let's just make that the big E. Energy is in play for tomorrow. Merck, Boeing continues to impress. And you still see some healthcare at Merck, Johnson & Johnson, Procter, Walmart. Trying to establish a support level here, but this should have been an up day, and it simply went sideways, so that's challenging, and the downward slope is noticeable. All right, that's everything for the intraday. Let's take a look at the sniper trades of the day. And we've already seen Tesla, but you can see this unfold. Quick scratch. Micro gain re-entry. Slightly paid. Caught a 2. Well paid. Crosses the dragon short. Second position. Very well paid. Caught a 2 on the crossing of the dragon with a higher low, but fails. Caught a 2 again, fails, and that's enough for the day. The two big trades paid for the ride. Here's Devon Energy. It's been on our radar. I noticed the huge gap down. Closed here, opened here, huge gap down, almost 8%. Puts a bottom in. Now we're interested. Higher low. I buy this essentially as a Kata 2 and a morning hook. Micro paid. Missed the short. Took the short. Standard work. Scratch. SSC. Immediate reversal. Scratch. And that was about it. So we got a micro payment in here, but there just wasn't much tradable follow through with most of that most of the goodies coming. You had to have been short that one, and we're not playing shorts overnight in this market. So that's where all the movement was. And that was really failure to fail further. That actually bodes well for tomorrow when I'm thinking about energy on the long side. Here was the S&P, so you got about $1.11 on the R10. I play the break of the PSAR to the upside. That was like a very slow moving COTA 2 or SSC. Quick fail. Quick re-entry on the COTA 2 upside. Standard exit, 1-2 exit on the 5-minute. Waiting for the PSAR to break. It doesn't, so I get long on the COTA 2 upside. Quick fail. Quick short. Micro gain. COTA 2 upside. Quick scratch. And that was about it. So we got paid on the one long and the one short to cover these other quick scratches and micro losses. Microsoft, gap up a intraday COTA 2 on those two rising supports. Standard entry, second position, well paid. Wanted to go short. I talked myself out of that trade because of the strength of that upward move and early strength in tech, but there was no other follow through, so we missed that one. This should have been an exit right about there. COTA 2 entry, standard work. Standard exit, it was just going nowhere. So we got paid well on the first move, missed that second one. I can live with that. Let's see. Was that all of them? Yeah, that was all of them. Oh, no, we got this one. PayPal, sorry. There's the opening. Breaks through the declining PSAR. I didn't take that one. I took the next breakout to a new intraday high and then kept the standard work of 50 cents for the R10 risk. Second position, got paid, exited at the skin of the dragon. Wanted to get short, would have scratched. Should have gotten short for sure. Should have been paid. Took the COTA 2 crossing of the dragon, taking out the PSAR, standard risk box. Reasonable follow through, about 1 hour. Pretty good work in PayPal. Take a quick look at the traders' performance today. Wojcik 1.5. Quick scratch. This should be a stop and reverse right there. There's the PSAR flip. Get paid. Oh, I'm sorry. He does get paid. Sorry. Yep. We gave back 2/3, kept 1/3. Good re-entry. I'd like to see you get out just a little bit higher. That's a great short. Now we're here, and we let that go. We let a winning trade get negative, and then we entered before it hit the PSAR, so we take that loss. Now we take the trade where we should. Oh, no, we got short here, sorry. Hadn't hit the PSAR yet, so that's questionable. This is where we should be getting long instead of here. Then that should pay off. Now this one rolls over. This is where we can be short. We let a winning trade go negative. This is where the trade should be long, not here. Good exit, good re-entry. Yeah, you got short on that one. That was all right. So got paid nicely. That's a great exit. Great re-entry. Good exit. Good re-entry. Let that go way too long. I like the short here where the PSAR breaks. That makes this a scratch instead of a 0.8 loss. This is where we should be getting long, not here. Great exit. So lots of room for improvement, but still getting paid. That's pretty good work. This is my brother's sniper work. We're going to see some of his charts here in a minute. 28 trades today. Best one was 2. Worst was minus 0.8. 14 winners, 9 losers. That's 50% winners, 32% losers. Average win 1.1, average loss 0.5. So if you're getting 5 to 3 on the win rate, and you're getting paid 2.5 to 1 average win to average loss, that nets out to 12.5 to 3. That's a 4 to 1 payoff ratio. That's pretty darn good. 12R for the day. This was getting problematic in here. Pretty good 0.2 expectancy by the end of the day. 2 point, yeah, pretty good. 12R for the day. Here's his PSAR flip, so we get short inside here. Standard risk. Second position, covered. Tried the long and failed, so 1.5 scratch minus, so 1.1 net towards the end of the day in AXP. To me, this is where there's an entry here with the standard risk that probably scratches. I like the re-entry here, and then I would take that maybe as a second position. But he does get this one, and nets 2R on that. That's pretty good work. This little breakout above here, standard risk, second position, 2.3. There's his exit order and his fill. So that one pretty a fractional gain from here to here, and then a reasonable gain. So that's 2.3 on just kind of a standard normal move. Nothing wrong with that. PSAR flip, tries the long side. There's the exit signal here. I think that's his fill. When this PSAR flip box hits position 1, 2, 3, and cover for 2.3, and that's minus 0.5, so he's at net 1.8 minus this little piece didn't, so he gets out. It rolls over again, doesn't get out, so that's minus 0.9. So that nets to 0.9 on Tesla. Just the follow through was not good. This is the DAX. PSAR flip should be getting long approximately here. As soon as that fails, we should be getting out in here, not here. This is where we should be getting short. Good scratch. Then when it crosses the dragnet, we should be getting short here and not here. And so instead of covering here, that should be a scratch. This is a good long. Now, when we're this far into the gain, you can't let this come all the way back here for minus 0.4 when you're up 0.6. This is where the short should hit, and when we're this far into the win, you can't let that come all the way back and lose 0.9. That's an adverse move of 1.5. This is where we should be getting long, and we should be scratching and then re-entering and then getting paid in here. This is where the short should happen, and then probably scratch through here. Here's the next. Now, as we get into the day, this is where we should be getting paid. Re-entry, re-entry, getting paid. And then this one should be a lot better than 0.8. And I'm thinking you're not using standard risk box here, because if this little move is minus 0.8, but this big move is plus 0.8, I'm wondering if we've got the your minimum manageable risk box. PSAR flip before he starts trading. We could be long here. He does get long here. Good payment. That's where we should be re-entering. Good short. When this doesn't work right away, get out. Good short. And then when it rolls over again, you can get short here instead of here. At least we got paid. This one, that's about as good as you were going to get. Good re-entry. You're thinking about it, and you're overriding the signals consistently, and that's hurting your performance. Trade at 1/10 of the size. I can't tell Nicole what your headers mean, so I can't comment. Just applying the standard sniper pattern. This is where the risk box occurs. That's where you should be getting long. You should be getting paid on all of that to here. I don't know what that box means. You got long here as it leaves the river. Then it went to here, and then you got out here, and then re-entered here, and then let it move 2 full bars against you, then got short here. I like that short, but I'd like to see you scratch. If it doesn't work, then this is where we should be getting long on the PSAR flip. We should be getting paid here. So we should be getting paid on this to here, and we should be getting paid on this to here, and we should be trying this. Got paid a little bit. Trying to understand the boxes. I think this is long, cashed, then re-entered long and sold. I'd be looking at that. I don't know what that means. I guess this is a COTA 2. We're already outside of Z2. And then we let that come all the way back across to here. I don't understand what that. We should be short about here and scratching. We should be long here and going. Griff is looking just at the SSCs. Obviously, the sniper hits this. We'll see that tomorrow, and that's where his cover is. That's the SSC. Gets out quickly. The The SSC tries again, gets out quickly. Obviously, the collapsing dragon crushes all of that. Brazil. Here's Jack with the 5-minute Aussie. 1, 2, 3. Great short. And then it was that far in our favor, and we let it. This was probably 0.6 in our favor, and we could have scratched, and we let it go minus 0.6 against us. When that rolls over, great short. Could have been the second position. Much better exit. Now, he's willing to not take that, and he should be taking this. We get in a little bit late. We should be short here. And then getting paid. Great SSC. Fantastic exit. Great short and quick loss. I would probably have tried this one as a Kata 2 and hopefully would hope to scratch. Great short. Wasn't much there. There's the perfect entry, but that's a really good entry. Great exit. That would be the perfect entry. That's a really good entry. Gave back a lot, but still got paid. Good short. Now this is, we may have given back too much on the horns of the dragon, but got paid. Even with some inefficiencies, 7R. Strict entries, strict exits, making a difference. Here's Jack on Tesla. Starts trading here. Tries the short, quick exit. Gets a pretty good entry here. There was a potential second entry here. 1, 2, 3 exit. Great short on the PSAR flip. Could have been a second position as it crosses the Bollinger Band mean. Good cover. And this one is 1.7 and 2. That's 3.7 minus 0.5. So that's another 3.2 in Tesla. Reasonable. This is an important lesson. How best to filter taking the SSC's counter to the trend. First of all, the SSC requires a harsh winter that then crosses the baby dragon and then crosses the dragon, and then somewhere in there that rascal turns to spring, and you end up and you hit the PSAR dots are coming down, so you end up getting your entry here. This is always going to be a counter trend trade because that's where your stop is, below the dragon. That's a collapsing dragon. So that's the trend. The trend is down. You must disbelieve that it's going to work. The only way this thing works is if it works right away. The minute it starts to hesitate, you got to cut it. You cannot say, oh, this is an SSC, therefore it's going to work. It's going to fail 2/3 of the time. So the trend is the downward. So it's always going to be counter to the trend. So you can't trade it as if you're going to believe. You have to expect to lose or see 70% of these things fail immediately. Like right here. Fails, it does not go up. Fails immediately. It does not go up, fails immediately. PSAR flip does not go up, fails immediately. PSAR flip, second leg continues. PSAR flip fails immediately. PSAR flip gives you a little gain and then fails. Do you see a pattern here? Unless it works right away, you are happy to get out of this thing. You should be desperate to get out of it unless it works so good that you just can't stand it and it gets out. But notice the downward trend. We should be crushing the CD here today. Every failed SSC is an immediate short. With that in mind, collapsing dragon gets paid. When this rolls over here, we should be short here, getting paid. When this rolls over, we should be short here, not here. And when I'm that far into the trade, I can't let that come back that far and scratch or fractional loss. I should be short in here, good scratch, massive short here. Now, if I've gone this far and I'm outside of the Z3, don't let it come back that far and give back half. I could be short here and then stop and reverse. This is where I got to be short and get paid. And get short and get paid. The SSC is always a counter trend. And when you see all of this in a bear market, we should be, every time that fails, we should be crushing it to the downside. And we're giving back way too much on this. Way too much. We let that one roll over to here. Let's see. There was another one here driving me nuts. Oh, this one. If we're long here and we let this come all the way back to here, and then this one, we're short in the correct direction, but we're late, and then it was that far to our advantage, and then let it scratch. You're believing in the SSCs and not capitalizing on the CDs. Like this one, giving back too much. Even on this one, I could argue you should be out here when it hits the edge of the dragon instead of coming all the way back to there. Let's get paid on the ones that are in our favor. Let's be ruthless on our risk management. All right, that's everything I got for us for today.